We got a tweet from Andy. He said, and I also like this take. This is a good one. I'm curious to get your opinion. Probably the second most common concern I've seen. Andy tweeted out, he said, Athena is only good during bull markets. And then he said, my brother in Christ, all of crypto is only good in bull markets. This is in relation to how much yield you guys are able to produce and why Athena has been so interesting, has been so attractive, right? You can have this yield of 27 or 30%. Obviously that yield can change, right? You're able to capture it based on how much people want leverage and stuff like that. So in a bear market, you wouldn't expect to have so much yield. But like, what's your response to Athena is only good during bull markets? How do you think about that?
Yeah, I think Athena is going to be quite reflective to the cycle, where it's going to look like the best thing ever on the way up. And then in a bear market, I think the design can still produce like above RWA returns in a bear market, which is like just based on the backtesting that we've seen, which it really depends on like how you think about the hurdle rate here, where I think even during 2022, the core yield actually beat US Treasuries if you're sitting in something that looked like this. But ultimately, like obviously people are going to be stepping out as that sort of like unwinds from like a bull market to the bear market. I think my general approach to these things is like, I'm a very strong believer that these are like market set interest rates and market forces, and that it's really going to decide how large should the USDE be. And all USDE is responding to is like market set interest rates. And so when funding is at 60%, that is the market expressing to us that USDE needs to grow orders of magnitude higher than it is. And when funding is like super low and has like declined in a bear market, that's just saying that we need to shrink relative to the market. And so we lift the shorts, which allows like the funding to mean reverse. Having said all of that, you really only have three choices, as I said earlier, in terms of like where do you produce a yield on a stable like asset. And I think what Athena has built is not replicatable in terms of like someone else is deciding we're going to fork this and go do it ourselves. But what other people do is very easily, we're very like easily able to sort of like add that to what we're doing. So if we decide at the very bottom of a bear market, like funding is absolutely terrible, whatever it is, you just close the positions and go sit in an RWA for like 3 months, and you can kind of wait until the conditions do get fine. I think that's one thing that people forget, is that when you close down the positions, you're back into USDT, and then you can sort of like decide where do you want to sort of go from there. So my view on it is that like the infrastructure that we've built, and I guess the relationships with the centralized exchanges and stuff like that, another project can't come and do what we do, but we can very easily sort of like pivot into another source of yield at a different part of the cycle when it makes sense.
What's an interesting segue to that is, I hadn't thought about this before, but I'm realizing it now. Traders should actually love you in a sense. Like if the trade that you guys are putting on, like even if they're not in Athena or using Athena USD, during a bull market, you guys are kind of helping keep funding rates in check because you're capturing that yield. You're kind of bringing things back in line of if, you know, the cost of leverage is super high. Do you think that's going to play a material impact of like you make it cheaper for people to long their longs and take it? Not that I'm not saying people should go out there and 100x their longs, but that's just what people do. People love to long their longs, own Bitcoin. They can buy 10 Bitcoins on top of it. Kind of a funny thing where you're actually supporting people willing to gamble and take out leverage on their coins.
Yeah, there is like a bit of a flywheel here, right? Because we're just like really passive, like non-toxic additions of flow to the market on like just on the short side, obviously. And as we sort of like compress funding, as you say, that allows other people to step in and sort of grow things, which are like really allows like a really interesting flywheel to develop around the derivative markets and crypto in general. I mean, even like looking back to last week, ETH funding was like 70% for like over the weekend and like the days leading into the weekend. Imagine where that number would have been if we didn't have $2 billion of shorts on like 10 billion of ETH open interest. Like at the moment, we're like 20% of the open interest right now. So it is quite funny to see it, where like even at the size that we are at right now, the apes are just like too strong during this market, and like you really can't even like compress them. So, but I do think that like structurally, the whole point of Athena is that we've identified you're getting paid too much for an unlevered cash and carry in CeFi, and that interest rate should never be 30, 40, 50, 60%. It should be 10, 12, 15 type. And yes, the yields are going to compress over time, but that's going to happen because we're doing our job properly. And that's actually like an outcome of like us identifying an inefficiency and making it efficient.
Tweet from Chain Yoda. He said, crypto VCs are funding algo stables again. This is the end of the cycle. This is the last cycle. What's your take on why all the other options have failed? You talked about it earlier on how some of these things have tried it in previous cycles, but maybe they tried to use on-chain or decentralized exchanges, so they couldn't get as big. They couldn't have your scale. Is it a timing thing of like, we're just at a point in crypto now where you're able to do this because everything's bigger, or is it your design? Like no one has truly tried your design yet.
Yeah, I think no one's really attempted it in CeFi. So this is like the first time that that's being done at like a true scale. I do think that actually we're quite fortunate with like the structural dynamics of this cycle versus last, which have actually opened up like an enormous opportunity for us. So all of the things like Celsius, BlockFi, and all of those centralized like sort of earn and lending platforms, you can really think about those as just like a conduit between retail's putting it in dollars, and then they're lending those dollars to a hedge fund to either go farm on chain or do like a delta neutral strat somewhere else. Those don't exist anymore. Like they blew up and they have not returned to the market in any way. So there's like tens of billions of dollars of cheap borrow that used to exist that no longer exists. And so if you're a crypto native fund now and ETF news is popping up on your screen every day, is it rational for you to go and capture like a 30% delta neutral? Or did you learn last cycle that actually when you're getting paid 30 or 40% to short, it actually made sense to be like completely long because actually the asset will go like 2 or 3x over the next few months. And so I think there's just like basically a complete dollar shortage within crypto now where you can't actually get access to cheap borrow to actually put this on. And so some of the largest balance sheets that would be doing that can no longer be doing that now. And then on the other side, you've obviously got like bullish sentiment, which is coming. And I think that's why you see such a dislocation and why it was such fortunate timing for us to come out now, which sort of like produce those dynamics.
Going on to some of the benefits, why people are excited. This is a tweet from Suzu, and we can kind of talk about where this gets super interesting, why I'm pretty excited about it. But he was talking about the biggest upside and downside for Athena is game theoretic. At first, exchanges benefit from Athena TVL and their investors, and then later, Athena at sufficient size can king make. Flows of capital away from one exchange towards another can cause bank runs. Athena could begin to compete directly with exchanges by offering perps, and kind of saying that at a certain size, you guys are kingmakers, and this becomes super interesting. We've already seen now Maker is thinking about contributing to you guys, and you're able to kind of swallow up. You're doing this trade, so why wouldn't they try to capture some of that yield? Looking at some of these growth perspectives, how do you think about Suzu's take there on whether or not exchanges, like right now, obviously people love it, but like, do you guys become even a bigger force than them pretty soon? Like, how do you think about that?
Ultimately, it's I don't think we'd ever sort of hold that much power because ultimately we're on that platform, right? So you can think about this like Tether versus like a custodian who's holding their assets for them, where if a bank is holding Tether's assets, even though Tether's making like 100x more like P&L than them like per employee, they ultimately can like shut it down and say like you can no longer hold your like underlying assets here. And so that's always where the power sits, which is like within the platform. And so fundamentally we rely on these guys to actually hold the product as actually obviously being on their venues. You might see some of the competitive stuff that he was describing where like exchanges might sort of push to have us more or less involved like between themselves. And that's obviously something that we just need to manage through time. I don't think it ever gets to a point where like we're ever threatening a sex with like flows that are occurring on Athena versus them. But there is actually a second order piece to this, which is quite interesting, where you can think about actually a lot of the inventory that's sitting within Athena as potentially like really interesting, just like liquidity to trade against like OTC. So we kind of know where we want to be buying a perp or selling a perp. And sort of the same with the spot inventory that's sitting over there. As we sort of get assets coming through, we know exactly where we need to hedge and at what price. And so there is like an element here where potentially we become one of the most deep pools of like OTC liquidity where we know we're like a seller at XYZ. And you can sort of have people trade into Athena's book to avoid us actually going into exchanges as well, if that makes sense. So that's less of us sort of like trying to steal Sex's businesses. It's more us just trying to optimize execution costs on our side and ultimately provide like a better yield for the users.
So in a future world, maybe I'm still thinking of this being too big, but like you could maybe see like Michael Saylor or the BlackRocks of the world. I guess maybe BlackRock probably has a contractual thing to go through Coinbase, but like some of the biggest buyers like that coming to you guys, if you have all this flow, maybe it makes sense to do it through you guys. Like, is that a possibility?
Yeah, potentially. I mean, like I said, we're 20% of like ETH open interest right now. So like, if you add it all together, we're kind of the second biggest ETH perp contract holder now, like behind Binance, if that makes sense.
Yeah.
If you put us basically on that list, would be number 2 behind Binance on ETH contracts. So yeah, like in an end state, if you've done that with like BTC and Sol at like 30%, it would be a pretty interesting like pool of liquidity for people.
I've seen some hypotheticals from the Gigabulls now that we've covered the critics, the FUD. Can Athena truly dethrone USDT? And is that your goal? Like as you look at this, is like, is that a possibility, or does USDT, I guess there's always a risk. So like USDT could be shut down tomorrow. Like we can't really model some of these things out, but like, is there a world where, is that what you're aiming for? I guess is probably a better question.
The honest answer is no. There's obviously just fundamental like scaling capacity sort of constraints around what we're doing, where we can't ever be $100 billion in size at the current market caps. The only way we'd flip Tether is if, as you said, something gets shut down there and they come down rather than us coming up. Doesn't mean we can't get like pretty big. I do think we actually can get quite a bit bigger than people expect. But the vision isn't to sort of flip them. And I think we play actually kind of different roles within the system. I think he's trying to find like an interesting niche of like not fully decentralized, not fully centralized, and then offering an interesting return for holding the asset as well. And I think fundamentally our view is that a lot of people in crypto basically just driven by economic incentives. And if you can put the right incentives around things, whether it's like incentivizing exchanges to actually distribute it for you. So every success story of a stable has always come with like a stablecoin pairing up with an exchange to actually distribute the product. We've obviously got like all 5 of them supporting us and I hope sort of like keen to see us grow. And they're incentivized by it because they can sort of like earn a lot more out of us than they can with Tether. And so, yeah, I sort of just see us fitting in this like interesting niche of sharing more of the economics with people to be really incentivized to push it. And like, I never expect anyone to be selling, to be holding a full, their full portfolio in USDT or their full portfolio in the, I always think that there's some balance that sort of makes sense between the two. And that includes myself as well.
We talked about how the synthetic dollar part of this works, and you guys being a form of money in that sense. We haven't talked about how the Ena token works. ENA, it's already at about a $15 billion valuation. It's a top 100 coin. It's week 1. Obviously, we've kind of walked through how this entire ecosystem grows, but like what role does Ena play in all this?
Yeah, I think a lot of the discussions that we've been having around what's the composition of the backing behind USD, for example, should you have like a ton of liquid staking tokens for more yield or less for like more liquidity and a safer product? What's your composition between ETH, BTC? Should you even have BTC? Those are like pretty important questions around how you actually design the safety and sort of like risk profile of the actual product. The other one is thinking about this insurance fund. So we have been collecting around like $5 to $7 million of interest income per week into this fund in the last few weeks when funding has been this crazy, which is a slightly insane number. It's like annualized like $300 million of like net cash flow into Athena Labs. And basically what we're doing with that fund is trying to like add an additional layer of safety behind the product. But ultimately there's a decision to make around A, how big should that thing actually get? And should that cash be used for something else at another point in time? And then B, how are you actually managing that insurance fund and what is it actually used for? So is it just like funding, or if you know, for example, the backing behind USD is 100 cents on the dollar, if it's trading at 98 cents on the dollar, can this actually bid and sort of like socialize some of the profits as well? There's like really interesting things that you can do around using this like second layer of safety within the system. And so really the governance token is going to be just playing a pivotal role in sort of designing a lot of these pieces.
God, I'm just excited that this is the first project, as I said, it's like the first thing that has people thinking about what's actually being built here. Like new, not that I'm not excited about meme coins, it's been fun, but I think that people will hit a fatigue there. And to have a new entrant come in, and also some of these second order effects you talked about, where it's like, you're actually helping the apes, even if they don't use you. Now we have more cheap borrow. You can continue to 100x long your longs. It's like some of that stuff it's just fun to think about where this all goes, man.
Yeah. Well, I think on that point as well, it's definitely on our mind that we actually need to try to do it in a slow way, because as you said, there are multiple like second and third order implications here. Even what we saw with like DAI moving like the DSR the other week in a pretty like dramatic way, that wasn't even something that was like in my mind around like a big change that could be happening. And so I think when you are trying to do something that's net new and obviously growing at like a reasonable pace, it's not good enough for us to sort of just say like throw it out in the wild and see how it goes. Like we ultimately need to take some responsibility of doing that in like in a controlled and like thoughtful way. So it is super interesting to think about it, but I'm sure we don't know all of like the different areas that this is going to sort of impact further down the line, and that's why we sort of just need to stay on top of things as we go.